So today we're going to talk about strategy. Strategy in uncertain times, war times, and what we're seeing. Oil is coming in, gold is coming in, equity markets look strong. The fear has gone out of the market after, thank God, not too terrible weekend. How do we have to look at the Israel-Iran conflict? What do we do? How do we play it? Let's go. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. So let's start with the Israel-Iran war. I'm super happy I didn't have to do an emergency video over the weekend because that would have meant that something bad would have happened. Not the case. Great. It's pretty obvious right now that this is going to be an attrition air war, and whoever runs out of missiles and drones first is the loser. There's not going to be an invasion or anything like that. Clearly no ground forces. Also important, that's why we needed the weekend to assess. Clearly Iran has nobody left. Nobody came to its aid. The Russians basically didn't even pick up the phone. Now, they still have their connections to the Houthi rebels, what's left of the Hezbollah. But it's not much anymore, right? The powerful proxy system that they had in place has been falling apart piece by piece. Syria, then the Gaza raid by Israel, which wiped out a lot of Hamas. Yes, there'll be terrorist attacks on Israel facilities. That's almost certain, unfortunately, it's going to happen. But this wildfire of escalation in the Middle East, it's not happening. Nobody is coming to Iran's aid. So that's the positive. That's one of the reasons why gold is going down. Why is oil going down? Well, I told you in the last video, a lot of people just love to play with the old cliches of the Middle East is in flames, oil is going to 200. I told you in the last video, the Middle East has lost a lot of its power as far as the oil market is concerned once the US became energy independent and is now one of the largest exporters of oil and other energy sources in the world. The Middle East just doesn't matter that much anymore. That's the reason why the Saudi Sovereign Wealth Fund invests in gold, in golf or in sports clubs. They built the line. They know they need to diversify. So also around, 80 to 85% of Iran's oil goes to China. So it's not even an issue for the West. What would be an issue is if Iran's regime was able to convince the Houthis to attack ships again, and the shipments then would shut down. That would be a problem. As long as that is not happening, then there won't be an issue. The Chinese have a bigger problem, and even for them, Iran is probably a small piece of the oil that they take. So how will this war end? This is the problem. So the Israelis basically figured out that a regime change is needed in Iran, and they're right. Right? They are not able to destroy the big underground nuclear facility. They don't have those underground bunker buster rockets that are needed for that. The US have it, the Israelis don't. So the real goal of Israel is a regime change. That's why the operation is called Rising Line, right? Referring to the line on the Iranian flag. That will be the crucial point. If they get a regime change, actually, that could be a big catalyst for markets because that will take out a big geopolitical risk. And this will be the part that's interesting. There are rumors that senior members of the regime have fled to Moscow over the weekend in announced planes. Who knows? We'll see, right? But that's basically what's going to happen. Because if they keep the regime in power, then the regime basically knows everything that's left for them to do is to get the nuclear bomb as fast as possible at all costs. So there'll be a component to it that'll involve a lot of espionage, things that are important geopolitically, but not for the markets. So let's look at the markets. Usually, in the past, the start of a war has been a great buying point for equities. However, the situation is usually a little different because you have a military buildup. Let's say the Iraq wars, for example. You know the war is coming. The markets are going down ahead of it. So they're actually down, and then the war starts, and then the relief rally starts. We don't really have this here because this was a surprise attack. I look at the commodity markets and I see oil is going down, but if we look at the oil price here on the daily and on the weekly, we see, regardless what happened, we have a change of trend, right? This is the weekly. What do you see objectively? Objectively, we see the break of the downtrend. Yes, we have had this before here. This is the weekly, right? Remember, this is the weekly. We had it here, but not on a close, right? So this is the second time we had it on a close. Now, will this turn into a bull trap? Maybe, but anything, as long as we don't fall below the downtrend, we have to look at it right now as this is a change of trend. On the weekly, as you can see, we had a higher close than we had in March. Right? Now we're still below January, but this is a positive sign. So if we are not certain that oil will keep going up, maybe it'll just consolidate around 70, it'll do something like this, like a sideways action in a big range, right? Like we saw in the fall, it came down, and then we saw the sideways action, which would make sense after you break such a long-term downtrend. Then the better play, and this is how I plan to play the situation, are the oil stocks and the energy stocks. Now, some of them have moved significantly. I look at something like Petrobras, moved 20%, right? From a really bombed out level, but still, that's a lot. So I'm looking at oil. Let's see if it holds 70. Let's see if it goes below 70, then the next line is obviously the upper end of this blue support zone, around like 68, 67.50. Does that hold? As you can see, that has held in the past pretty good, right? Here, 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 here. So, okay, maybe we can extend the zone down to 65 if we want to take this chunk here. But really, it's happening around the 68 level. That would probably mean that the energy stock's going to come back in a little bit. And then I'm going to be on the buy side. Because if we see a turn in the energy stocks, which have been neglected for a long time, they have a lot of room to run. Nobody is invested in the energy stocks, so they all need to buy. And here's the secret sauce that I really like. A lot of the hedge funds are way, way behind the 8 ball as far as performance is concerned because they were underweight in equities so much. Actually, this year, after Liberation Day, the retail investor got it right and the professionals got it wrong, at least a lot of them, who didn't buy aggressively enough. And now they're stuck in a performance vacuum. So now we have to think, how can they make up that performance vacuum? And the energy stocks are one of the ways to do it. It's a small market now that you can push up. The retail is not invested in it because they love their Max 7 stocks. They will jump on the energy train once that one really gets rolling. So that if the professionals can position themselves first, that's their chance to catch up. Now, gold, silver, let's talk about the precious metals real quick. Gold taking a breather, but we got a higher close on the daily and on the weekly. As you can see, it really good on the weekly higher close. Very bullish, right? The consolidation phase on the weekly, it's over. I told you that before. Now, will we come back in? Will we get down to 33.80? Yeah, that's a good possibility that could happen. But we've learned one thing with gold. It is the down moves now are fast and they get bought up quickly. So I still prefer the miners to physical gold because they're making bank here. And for them, the rising energy prices, unless you're running some generators in the jungle in Latin America, they're not that problematic. It's the manpower is the big point of cost for them. So if I get weakness in the gold miners, then I'll pick that up. Interestingly enough, while we have this correction in gold, silver is holding up quite nicely, and even better than silver, platinum. Look at this. We had a super nasty candle on Friday. You look at this candle on Friday, you were thinking with gold coming in, oh, we're doing gap fill right here. Nope. Look at this, going right back. So platinum on weakness, still one of the best trades we can have. Silver holding up at the moment, so we still like silver stocks on weakness. And I'm looking at energy stocks, specifically oil stocks, obviously because uranium I like anyway, on weakness as well. Thankfully, it looks like there's at least no escalation in the Israel-Iran war as far as more countries and regions getting involved. Let's hope this stays this way. Let's hope that this gets resolved and there'll be more peace in the world. We don't need more conflict. Have a great start to the new week. Talk to you later. Bye-bye.
If you like the content, help us get to 2,500 subscribers. And as a thank you, we'll start a real money portfolio with gold mining stocks, uranium mining stocks, and Bitcoin.